what advice would you give an aspiring investor who's, about 12 months behind where you're at?
So if you plan on raising capital for the first time, I would say to approach your network and ask for advice rather than asking for money,
Mhm.
and before you even have a deal.
I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this is a first deal episode where we walk through what it takes for someone to find, fund, and close on their first apartment complex. And if you're an aspiring investor yourself, you are probably trying to do exactly the same thing. So before we get to this episode, make sure you hit the subscribe button below and the little notification bell to make sure you get notified every single time we post a new episode. And now, enjoy the show.
And here we go. Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. It's one of our first deal series episodes. We have Eric Charlton on the line with us, who recently closed on an 18-unit apartment complex in Buffalo, New York. And what I'm most excited about on this one is this is one of our Tribe of Titans events. We got several tribe members along. Eric's a member of our Tribe of Titans, and it's always fun when we have a tribe member closing on deals. So Eric, welcome to the podcast today.
Thanks for having me on, Brian. I'm a big fan of your show, and pleasure to be here.
Thanks a lot. It's been a lot of fun getting to know you over the last couple of months, and I'm really excited to dive into this 18 unit. But before we talk about the 18 unit, let's talk about you. Do us a favor, tell us a little bit about yourself and, background, and kind of lead us into what got you into multifamily.
Sure. So I'm 32 years old. I've been born and raised in Buffalo. I've lived here my entire life. Graduated from University of Buffalo with a finance degree. And my parents they own a local Xerox dealership for about 30 years now. So after college, I sold cell phones for a couple of years, and then I just made my way over to the family business, and been selling copiers and printers for over 8 years now. And been growing the family business, and that's been pretty fun. But my history with real estate, about 5 years ago, I bought my first duplex. And that was back in 2017. I actually let my friends, I didn't treat it like a business. I let my friends live in the other half for about half the price I should have been getting in rent. And since then it's changed. I've learned, I've come a long way, but I was just excited to own my first home then. But since then I've bought another duplex with my fiance last year, and that's my short real estate, my personal holdings.
Mm-hmm.
But just been working for the family business, and I really wanted to focus my time, effort, energy towards real estate rather than continuing to work in the family business. So
nice. So in the printer copier machine business, and then transition to real estate. And something you said about the duplexes, I think this is true of a lot of people. One of my partners once said that we were all hobbyists in real estate. And at first I kind of took offense to that, but I started realizing, I didn't treat my single family like a business either. We had relatives move in, we had some friends move into the property at one point in time, and, we gave them discounts and whatnot. But, there came a point where, I flipped a switch myself and went from a real estate hobbyist to treating it like a business. And I think there's a big difference between the two. You get benefits of just owning real estate, but if you want to scale, you got to treat it like a business. So let's kind of dive a little deeper into your transition from the family business to real estate. If you were to go in and explain the decision process, what really triggered you from moving? I don't know, you didn't say you're moving away from, but maybe you did. What triggered you to go from family business to jumping into real estate?
So I still work for the family business. It's my income. That's my cash flow. I need that while I grow in real estate. But really what got me into, multifamily game is my good friend and now business partner. We're both hockey guys. We joined the same men's hockey league team at like 23 years old, about 9 years ago. And I've just watched my friend Chris, just grow his personal real estate portfolio. And today he's probably got 11 years of experience in the game. When he didn't have a W-2. He just started wholesaling, and then started doing fix and flips. Got a couple single families he held on to because he didn't want to sell, and then started scaling into duplexes. Got a bunch of duplexes, and then he finally graduated from residential. He got a 6-unit. And then several years back, he got his first 12 unit.
Mhm.
And my partner quickly realized, not quickly, it took him 10 years really to realize what direction he wanted to go. But he spent 10 years just grinding in real estate, getting single family duplexes. And he's got a 52 unit portfolio. That he has personally, he's not over leveraged. He has no partners. He wears all the hats.
Mhm.
And he was just kind of doing his own thing for so long. And he was getting tired of that single family duplex residential game. And he knew what he wanted to do, and he wanted to scale a business and scale it using mid to large size apartment buildings. So yeah, so that was the plan. And he's a very introverted person, very, very head down execution kind of guy. And me being in sales, right? I hopped into sales after college. I've been in sales in the family business for 8 years now. I have no problem, talking to people and networking and creating relationships and, cultivating relationships. And that's kind of what I've been doing for my personal life for a decade now. So it was a good fit. And that's how we came to have a partnership.
Nice. And I like it. I mean, it sounds like, he's got a lot of experience, 52 units, I think you said. Just curious, are they all in Buffalo area, or are they?
They are all in Buffalo. Yeah.
Okay. A lot of goodness to that, to having all your portfolio in one area. A lot of benefits. There's pros and cons to everything, but there's a lot of benefits to that. And so, he's scaling a portfolio, and it sounds like it's a pretty good match. You say he's introverted. He's focused on, assets and management and whatnot. And you, with your sales background, can bring something to the table that he's probably either not very suited for, or not, doesn't like doing, if that makes sense. Is that
right? And he actually told me, he's like, years before you came on board, he kind of knew the writing was on the wall. He had to go out and network and go create those relationships and not wear all the hats, and to scale the business. But he just couldn't get out of it. And then and that it just made for a great partnership for me to come on board and us to start our own company.
Yeah, I think it works great. There's different, you guys have different strengths, and you have different things you're good at. And between the two of you, it seems like that you'll be able to cover down on most of the bases. So something that he's either unwilling to do or not good at, you can come in and you can build those relationships that he may not want to or have the time to do, whatever the case is. So cool. I mean, I love the story, love the synergy there, and how you guys were able to make that work. So what are some of the things you did to educate yourself about, multifamily and be able to talk competently about the industry?
So your podcast, Brian, has been, now I didn't know it before, jumping into the game. After we closed, I came across your podcast while networking. But podcast and YouTube, like you have to educate yourself in that regard and be prepared. But I was never going to know everything before jumping in. And I'm a big believer if you can't be perfect before you move forward.
Yep.
And you have to take action, because I believe that leads to the best type of education, that firsthand experience. And that's what we did. And that's how I learned the most, everything I have. I've took action, and I've gone through some ups and some challenges and got through them. But even my partner will say it, like, you don't know what you don't know. And you have to go through these experiences to get things under your belt. And maybe you'll go turn left when you turned right the previous time and you ran into some trouble. And so I think taking action leads to the best type of education. And that's, obviously I educated myself through YouTube and podcasts. I'm not really a music guy. I drown myself in podcasts. You can never learn everything. It's a, especially as it's a changing environment too. So you always got to be on top of it. So yeah.
I agree with a lot, everything you said there. And I'll just like to highlight something. I tried to self-educate myself, and I ended up going through a coaching program to do more. But there came a point in my own trajectory where I realized that, I'm not going to learn anything else from podcasts. I'm not going to learn anything else from reading another book or going to another webinar. And that's when I realized that, for me to go any further in this business, I have to start taking action. And that was like one of the light bulb moments, that really put me on the track where I'm at right now is, moving from the, consuming information to the actively going out and learning the lessons. And I think you're wise beyond your years in saying that you learn more through experience than you do from podcasts and whatnot. I mean, you can definitely learn from podcasts, but you're going to learn a lot more from experiencing than you are from listening to other people talk about their experiences.
Thanks, Brian. And you know what? There were a couple times where like I wasn't taking action, and I was already drowned myself in podcasts and YouTube. And it's almost like a depression comes over you. Like you can't listen to more and more. You have to go out and get your feet out of the mud and go do something. That at least that's how I was feeling.
And I would do a lot of podcasting, to and from work, and there'd be a lot of daydreaming involved. It's like, man, and I'd imagine myself in their position and, imagine myself closing on a deal or whatnot. But, really, after too long of doing that, it just came to the point, if I'm ever going to do this, I need to take action. And that's like you said, I think that's where the true learning took place was, I knew enough to take a step, and I took the step. And then from there on out, it was just, okay, what's the next step I need to take the step, do the best I can. And I've made a lot of mistakes. I honestly have. And that's the best way to learn.
I agree.
Yeah. So, but cool. So yeah. So anyway, sum it all up. Basically you educated yourself, YouTube, podcasts, and then, the best educator taking action and, learn by experience. Did you have any significant challenges, breaking into the industry?
Well, I personally didn't, just because I wasn't in the industry before my partner kind of approached me and brought a kind of a business plan to my desk, basically asking to partner up. So I didn't really have any challenges. Of course, there were some growing pains just trying to, find a deal, which we'll talk about, and, get through that deal and closing on it. But as far as challenges beginning, I mean, not in particular.
Okay. Yeah. And I think the way you went about it, linking up with somebody with experience, challenges that people who didn't do that, AKA me, challenges that I faced getting into the industry, I think were wiped away because you had linked up with somebody who had some experience,
And I asked him, because I was preparing for this episode, and I was like, challenges, like I and then he brought up all his 10 years of experience or 11 years of experience. He ran through a lot of situations where he had to they were challenging. And just for example, like when you're getting started and you have to you're wholesaling or you're fix and flipping, if you plan on selling a property and you don't have a W-2 like I did, that's your income, that's your food on the table. My partner has 4 kids, and he the closing fell through, so like he had to figure out and he only has a couple capital events, he calls them, every year or so. So he didn't, like, if one gets pushed out 3 months, you got to find, you got to just adapt. There was plenty of challenges. Yeah, right. There was plenty of challenges for him throughout the 10 years of growing and experiences that he's gone through. But for me, I mean, I'm sure we're going to continue to, get challenges, and we're going to continue to grow uncomfortably and just continue to do what we're doing. And I'm sure there's going to be challenges along the way.
Yeah, I'm trying to string along these capital events just like he is. And a lot of people liken W-2 income to a drug, and I think it's true. I mean, I've made more money in the first 6 months of 22 than I made in the first 6 months of 21, right? So I'm not doing poorly by any stretch of the imagination, but not having that constant income is I did go through some withdrawal symptoms, let's just put it that way. But I've said many times before that the best way to reduce the friction getting into this business is to find an experienced partner and latch on to that experienced partner. And it sounds almost like the experienced partner latched on to you, just as
A little bit. It was definitely mutual, but yes. Yeah. There.
Yeah. So that's nice. While you were saying that, I remembered when I was first coming in the business, I had somebody offer to bring me into a deal, and they had a couple 12 or 1,500 units at the time, and I remember saying no because I wanted to be the guy in charge, and I ended up going through a lot of challenges to get to that point. And as you were talking about that, I was just wondering, what would life have been like if I would have, said yes to him, come in as a GP on a small sliver of a GP on a large property to start out with. And anyway, not probably wasted a lot of time for me conjecturing, but it would have been different. And I think it would have been an easier route for me. So let's talk about this. Something I ask everybody, and I think I've missed it on the last couple of podcasts, so apologize to anybody listening. Something I like to ask everybody is about their motivation. So Eric, what is your big burning why?
So I knew you were going to ask me this, Brian. So I kind of was thinking about it beforehand. And, when the pandemic hit, obviously the pandemic changed a lot of people in their personal respects. But for me, my parents had to lay off all 15 employees we had. And I'm a W-2 employee. And, you were just talking about that W-2 drug, and my income, my cash flow, it was gone. And and this was before the government stepped in, and there was a complete panic that came across me, I remember. Mm-hmm. And, I was taking it for granted, like you just said. Yes. So, this time was, it definitely changed my perspective on things. And then I look over to my good friend at the time. We weren't business partners, Chris, and he had about 48 units at the time. And he was just spending the days with his wife and 3 kids at the time, just without a worry in the world. And it was just, I was witnessing true financial independence. Yeah. And just he was not caring about what's going on. Just he had more than enough to live off the rents. And, meanwhile, he gets that, principal pay down from the tenants, and he's got, the appreciation on the back end, but he was only living off of the cash flow. And I witnessed true financial independence. So that definitely was a motivating factor in me wanting to drill my time, effort, energy into real estate. As far as another reason, I grew up in a family business. I've watched my dad go to work, and come back from work, and he genuinely loves running his company. He loves what he does. And I truly believe that. And I don't get me wrong, copiers and printers, I love selling copiers and printers. I could talk about them all day, but I don't genuinely love to do it. And I'm good at it. But I would like to create a company, create a business where I genuinely love what I do. And I feel like, I only have about a year or so experience in the, mid to large size multifamily game, but I do see myself loving what I do and genuinely like getting excited to get into projects and talk to investors and, just do everything what we're doing in multifamily rather than the copier and printer game. So another motivation, big burning why, is doing what I love.
Yeah. I think that is important. I mean, it's interesting how things have evolved. I think, a couple of generations ago, the doing what you loved was less important. It was more important to, fulfill your duties and responsibilities. But the more I realize, what makes me happy, doing what I love is the answer. And if you can align doing what you love with something that, produces enough income to live, I mean, that makes the happiness equation a lot easier, a lot easier to make the sides match. So I love it. And thanks for sharing that. I appreciate it very much. So let's talk deal specific stuff, 18 unit in Buffalo. We already talked about, the partnership aspect and how you guys, built the partnership. Let's talk about finding this deal. How did you guys find it?
So it was my partner and I, we knew we're going to start a syndication company. We whiteboarded the entire business plan out, even the timeline of finding a deal and closing it and, executing the game plan, but we didn't have a deal. And that was, I was so motivated at the time. This was during the pandemic, that I needed to get out of the rat race. I finally came to that realization, my big burning why. Right. And so my partner, meanwhile, his focus and energy effort was all into his 50 unit portfolio, because he's got moving pieces and he manages it. And that's where his effort, focus was. So I needed to find value to draw him towards a project of our own. So well, basically he drew up a list. His wife is also a realtor, and he cut a list of all the apartment owners of 5+ units here in Buffalo, and just told me to get to work essentially. And I spent, I think it was like 3 weeks straight, just handwriting personal letters to these apartment owners, just asking them, direct to seller, right? I'm just handwriting letters direct to seller, and, colorful envelopes, and that's the plan. I've been in sales, right? I know how to prospect. So,
the yellow envelope gets opened when the white ones don't. Yeah.
Right. Yeah. And we had red ones, all these color ones, but just to stick out. And as you hit them every 6 months in a different color envelope, they're going to end up knowing, who you are and everything. So, so I ended up sending out all these handwritten letters, and we started getting feedback. I was starting to talk to these apartment owners, and we kind of focused in on this 18 unit. And I told you my partner bought a 6 unit as he was scaling, and that was directly across the street from these properties. So he knew the management, he knew the utility costs. As soon as they responded to the letter and told us their addresses, he was like, this is the one. And then boom, we were laser locked on that deal.
Yeah. Nice. Good. So you don't hear that very often, the direct to owner campaigns. I think 18 units is still kind of a space where that's viable. I think once you get above a certain point, direct to owners, I mean, if you look at the owner of record on any of our properties, it's an LLC, and you pull up the address and it goes to a registered agent, which is an attorney's firm, in the state. So,
Brian, I do hear that broker relations is the number one way to get deals. And I respect that. I'm more, the proof of concept was there. Even in a hot market, you could find a mom and pop operator by going directly to them. So I think that's what I wanted to focus on. And obviously you can get deals from brokers, but I probably will never stop trying to go direct to seller, just because, our first deal, that's how we found it.
Yeah. And I think it works. Like I said, there's a space where that works. And yeah, I think, when you're going for the mom and pops, I think that space is somewhere between, the 4 and 30 unit mark. Anything above 30, and you're more likely to be into the more sophisticated ownership. It also depends on where you live, but I would say there's a certain cutoff point where it's more rare to be able to do that. But I actually brought somebody on the podcast about a year ago that did a direct to owner on a 65 unit that was
there you go.
a $9 million purchase price. So it is possible. So that said, let's talk about the capital raise. I know this was one where you guys had to bring in exterior capital to close. So let's talk about your challenges there and your lessons learned and how that worked out for you.
Yeah. So I'll definitely dive into that. We had the opportunity, we walked the 18 units, we got it locked down under contract. And, I created an investor deck, and I was up to the plate, right? My partner, his lanes were kind of the lending and operations and underwriting and all that, whereas I had to get the syndication attorney, and I had to raise the capital. So I got to work on the investor deck, and just blasted my entire, I had a 350 list of just friends and family that I knew in my personal network of growing up. So I approached everybody and anybody. And, I always thought, Brian, like, you have now I didn't have this experience, but like, I always thought if you have a good enough deal, the money would come. And that really, it wasn't the case. I didn't like, I didn't have any experience. People didn't know me as in real estate. And I definitely had some struggles just getting traction. I got a ton of verbals, right? I got a ton of verbal yeses, and yeah, definitely I'm in. But when it came to conversions and getting the capital liquid right into the bank account, it was definitely harder than I anticipated. Now, thankfully, I had enough friends and family that bet on the jockey instead of the horse kind of situation where they supported me, and I wouldn't be here today without them. But it was, I thought it would be a walk in the park, 350 grand. I thought it would be a walk in the park. It was not a walk in the park.
Yeah. And I'll be honest, this maybe gives a little bit of my personality. Maybe pride is something that Brian Briscoe has a lot of. But I remember 4 years ago sitting at a multifamily conference, and the conference organizer, also has a coaching program, brings one of his former coaching students on the stage and congratulates her for raising 400,000. And I'm sitting in the audience. I'm like, gosh, that doesn't sound like a lot of money. I'm like, oh my goodness. And then I tried to raise money, and I had a whole new respect for that $400,000. It was just like $400,000 for a first deal. I mean, you raised 350. That's a lot for your first deal. And so, congratulations. I know I've had a lot of people, on your end of this podcast who came in with a lot lower sums and were just like, man, it was hard. And that's really the reality. Is $350,000 is a good chunk of change to raise on your first deal. So congratulations on that.
Yeah, thanks. And like the thing about like, I was hit with reality. It was way harder than I anticipated, but like the deal itself, almost as if it didn't matter to the investors. They just looked at me and they were investing in me, or they were out. And like the deal itself, the rents were down 30% compared to where the market was. We got it at a really good price per door at $66,000 per door in a B class area. And, it was a smoking hot deal, but it didn't matter to, the people who invested in me they would have invested in another deal. You know what I mean? It didn't really care about the deal. They cared about me investing in me.
Let me let you in on a secret. That will not change. Okay. That doesn't matter if you're doing 18 unit deals or you're throwing a couple of zeros on the end. All right. I will say, after, being GP on 10 properties, about ready to get involved in number 11, the people who have invested with me have done it because of me. I mean, the deal kind of sort of matters, but it's a relationship game. And that's really what you're going to see more often than not. People are betting on the jockey and not the horse. You build trust, you build a relationship, and it's a lot easier to put money in with somebody you trust than, finding the best deal in the world. So that's not going to change. So let's talk about, we talk about finding the deal, raising the capital, and somebody just threw in the chat exactly where I'm at here. So, or exactly why I'm here. So yeah, good. But let's see, where are we? Closing. There we go. That's the next step in the process. Were there any big hitches, getting to the closing table?
Well, besides getting the money in, which we fully did, and we had to delay closing a little bit. The town kind of got in there and they delayed it, but because they had some requirements that the previous seller had to adjust. But it was delayed, but we didn't really have any specific besides raising the capital, right, which we fully funded it. As far as
the town had some requirements.
They said before you transact the deal, you have to do the plumbing. They had to do something with the plumbing. So we had to go back to the drawing table and work it out with the seller. And we ended up doing that plumbing work and just, making a clause into the contract. But yeah, it just random things that delayed the deal. One thing my partner did learn on the lending side, and this goes back to you don't know what you don't know. And we got really creative with structuring the terms of the loan. I think it was an interest only loan, at 3.5%, and for 3 years. And it was, but before that, we didn't do a interest only loan. We kind of were just doing a different type of lend. Now this is my partner's lane, so I don't really know exactly what happened, but he said that he realized we can do it, or the bank kind of realized that, hey, do you want the bank to fund the rehab instead of you raising the capital for it? And that completely switched the structure of the deal. And again, experience, you don't know what you don't know. And we didn't know that the bank could fund the rehab, and for the better, it restructured the entire deal. So I don't want to call that a challenge or a problem, but that's something that definitely prolonged the process a little bit. And we learned along the way.
Yeah, that's nice. I mean, and we've done several deals where we've wrapped that into the lending, and it's just a different set of underwriting for the lender. They have slightly different standards, and they're going to be looking at your, ARV, which is something that you don't hear a lot in the multifamily industry, but the after repair value. They want to make sure that their money is safe, and that's typically what banks do. So yeah, I could see that delaying things a little bit, because they're going to go through a slightly different underwriting process, and they've probably got to re-underwrite the property. So, and then go through the approval property process again, but fortunately it worked to your benefit. And you got some of that wrapped in, and if you're at a 3.5% interest rate, I mean, that's big right now, because I don't think there's a lender in the nation that's offering those rates right now. But so remind me, when did you guys close on this property?
We closed January 28th. So about five-ish months ago.
All right. Well, it's June 28th. So 5 on the dot, actually. So yeah. So in the 5 months, how have things gone since you guys closed?
It's interesting, because like during the under contract stage, I'm kind of up to the plate, right? I'm up, I have to raise the capital and get this deal closed. Obviously my partner's doing the lending, and he has his things he has to do too. But once we closed, it's kind of my partner who runs the operations and has his property management team. And there were 4 vacancies during the under contract stage. So we told the seller, don't fill those. We're gonna renovate them, and that's what we're gonna do. So after we closed, it's nice to see the execution side of the business, where you have a game plan, you want to renovate these units, you end up doing that, you bump the 14 other occupied tenants rents up, and it's cool to see everything kind of function. We're delivering returns, we're profitable, so we're delivering our investor returns. That was a nice step.
Nice place to be.
It's one deal is one deal, right? It's not like I told you before we recorded this one deal isn't changing my life financially in any way. In fact, I have more money buried into it, because I was an investor as well, than I do come in residually. So but it did way more as far as like a credibility, a momentum standpoint. And it did much more than just only a financial gain for me.
I think what I said before we hit the recording button, and I'm going to repeat it because I thought it was wise beyond my years, but any one deal isn't going to be life changing, but the path that it puts you on is. And that's, I think, the beauty of the first deal. And it's why somebody that one of my mentors always talks about the law of the first deal. The first deal by itself, is not life-changing, but the path it puts you on is. But
absolutely.
All right. So what's next for you?
So it's been 5 months since we closed it. I've been, since then I've joined a lot of networking groups, and yours included. Your Friday networking groups, probably my most favorite hour of the week. But we're out there, and as soon as you close on a deal, I had brokers reach out to me, and that was, we kind of had organic deal flow. We kind of have organic deal flow just because we have a deal under our belts, and brokers saw us close on a deal. So So what's next for us? We actually, my good friend who's a broker, I also play hockey with him. His family is selling off their 40 unit property they built in 2009. And he was like, hey, I know you guys are doing your thing before I bring it to market. Why don't you guys have a first crack at it? And so, yeah, we walked the 40 unit. It's a really nice, it's 2009 build. It's really nice. And they came in at 3.4 million. They were asking for 3.4. We started negotiations off at 2.8 million. And just last week, we both agreed to a $2.95 million purchase price. Yeah. And right now our attorneys are going back and forth just to get the language down, and hopefully we'll have it under contract within a week or so. So that's what's next for us.
So yeah, virtual high five going out to you. That's awesome. And that's something that we found as well is, without your first deal under your belt, it's hard to get brokers' attention. But once, use it, play that card as much as you have. You've now syndicated an 18 unit, and brokers should pay attention to you. And that's and
definitely, you know what, I was playing hockey with my good friend, and I didn't really, I knew he was a broker, didn't really know exactly what he did. Yeah. And then all of a sudden I'm credible, right? A little bit credible. Yeah. We closed the deal, and then he's reaching out to me, and then, we're doing what we're doing. So it's awesome. Kind of great.
Well, congratulations. Hope that works out for you. Next question. And I probably should have prepared you for this before the show, but if there's one question I want you to nail, this is it. So no pressure. What advice would you give an aspiring investor who's, about 12 months behind where you're at?
So if you plan on raising capital for the first time, I would say to approach your network and ask for advice rather than asking for money. Mm-hmm. And before you even have a deal, if you were just to approach your network and ask like, hey, I'm getting into real estate. Are you invested in real estate? Do you have any experience or advice that you can mm-hmm. give me as I go into this journey? I think that would have, that's the mistake I made personally. I think if I approached my network before asking for money, it would have done two things. It would have gotten good feedback. I would have gotten to know investors are different. They have different financial goals, and it would have gotten me to know my prospective investors a little bit more. And this also warms that door. It tells everybody, hey, like, in 3, 6, 9 months down the road, like when you have an opportunity to put on their desk, they're going to somewhat expect it. So I think that's definitely something that I would tell aspiring investors, even though I'm still an aspiring investor myself, but I definitely approach your network and ask for advice rather than asking for capital.
Okay, I love it. I love it. And I think that does a lot of good things. I mean, the first time you talk to somebody about a deal, it shouldn't be when you're asking for capital,
and that's what, Brian, that's what I did. I made all my moves on the dark. I was writing handwritten letters. I was, we got it under contract. We created the investor deck. I didn't tell a soul. My parents, like nobody, none of my friends. I was literally doing everything in the dark, and I approached my network cold. And it was probably the biggest mistake. And that probably hurt the conversion rate so much because I wasn't networking. I wasn't out there. I wasn't, I was doing everything cold. I mean, in the dark. And that was definitely a mistake I made.
I got a big smile on my face right now because I did the same thing, and it was, if I, coulda, woulda, shoulda, if I could go back and, I would have prepped my network. I would have sent out emails. I would have called people, tell people what I was doing long before I was raising capital for the first deal, and it would have been easier. All right. Last question. How can listeners learn more about you?
You could find me on LinkedIn. That's probably where I'm most active. Eric Charlton, and or our website, buffalodynastyventures.com. You can pretty much find anything there. You can schedule a meeting on my calendar through our website, and you can learn more about me and my partner through our website.
Awesome. Hey, well, thanks, Eric, for coming on the show today. And for those who are listening to the podcast, this is where the Tribe of Titans members get the exclusive benefit. We're going to hit the stop recording button, and we're going to have a Q&A for the Tribe of Titans members who are here. So if you're not a Tribe of Titans member yet and you're listening to this, there'll be a link in the show notes to join. There's also going to be links in the show notes to Eric's LinkedIn profile and to Buffalo Dynasty Ventures website. So check him out as well. And that said, once again, thanks for coming on the show. And here we go.
Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.